Hello friends, today we are going to study about national income. National income is one of the most important indicator to assess the overall economic situation of a nation. As such, it holds a great deal of general public interest. An individual person, a business entity as well as the government, each of these have to maintain the accounts of their income and expenditure in one form or another. They must have a clear-cut idea about the sources of income and the various heads of expenditures. In order to have an accurate idea of the economic progress in different sectors and subsectors of an economy, it is essential to account for the total income generated through economic activities. It is important for the government to know the changes in national income and per capita income in order to have a proper assessment of the economic progress in the economy. J.M. Keynes, in his treatise General Theory of Employment, Interest and Money in 1936, has brought about a sea change in the field of economics. Macroeconomic consideration like aggregate national income, national consumption, national saving and investment gained focus. The national income accounting is by no means an easy task. A good deal of computation of statistical data is involved in measurement of national income. Computation of such data involves treatment of different aspects of the nation's economic activity. National income and product accounts, the input-output table, the flow of fund statements, the balance of payments and the national balance sheets are some of the statements prepared in order to account for nation's economic activities. Let's now study the terms associated with the concept of national income. Certain important terms associated with the concept of national income have been explained with the help of a diagram. The first one, factors of production. Various inputs that are used in production are called factors of production. The factors used in the process of production are land, labor, capital and organization. Some of the examples includes land used in agriculture, capital invested in business, etc. The factors of production are compensated in monetary terms for the contribution they make in the production process. This compensation is known as factor income. The factor incomes that land, labor, capital and organization earn for their role in production process are rent, wages, interest and profit respectively. The factor incomes are also called as factor cost, as they are the cost to the entities incurring it. Factor income or factor cost are components of national income. National income can be computed by aggregating all the factor incomes generated in the country. Second concept is transfer payments. The payments or receipts that occur without any economic activity taking place or without making any contribution in the production process are called transfer payments. Some of the examples of transfer payments are pension, subsidies, indirect taxes, windfall gains, donations, grants, scholarship, allowances paid to the old aged, handicapped, underprivileged people, etc. Transfer payments do not form the part of national income computation. The third concept is final products. The products directly consumed by the final consumers are called final products. The final products form part of national income computation. Their monetary values are distributed in forms of factor incomes. The goods and services used in manufacturing of final products are called intermediary goods or products. These include raw materials, lubricants, fuels or energies, etc. Intermediary goods are not added to measure the national income. Let us move ahead to salient features of national income accounting. The first one is national income accounting involves sector-wise preparation of accounts on the double entry basis. Second, accuracy in measurement of national income accounting requires a detailed statistical statement of various sectors. Third, on the basis of national income accounting, the accounting relationship among different sectors of the economy is established. National income accounting basically considers the factor's income or factor cost or final goods and services produced in the country. It also takes into account net foreign income earned by country, that is through export and imports. Let us move ahead to factors affecting growth of national income. Factors affecting growth of national income are resource base, government regulations and policies, and socio-political stability. Let us move to the first one, that is resource base. A country's national income depends upon productivity of the factors of production that prevails in that nation. If the resources of a nation are rich in quality and volume, efficient and productive, the level of national income or GNP will be higher. Thus, the resource base is one of the most major determinants of a country's national income. A country's resource base basically depends upon its topography, climate condition, quality of population, etc. A nation's resource base comprises of certain factors that are given here in this diagram. As the diagram shows, there are certain factors like land resource. The determinants of land resources are availability of land, fertile soil, coal, minerals, petroleum, natural gas, variety of metals like gold, iron, copper, silver, etc. Forest resources, the variety of timber, herbs, flora and fauna, all that comprises biodiversity. Water resources are oceanic biodiversity, fresh water resources, sea belt coverage, etc. Human resources are the workable population, that is extent of demographic dividend that comprises of skilled and unskilled labor. That depends upon education, vocational training, gender ratio, level of manpower planning, human resources, developmental initiative, etc. The next is financial resources. That depends upon level of investment, domestic and foreign, risk taking capacity, foreign currency reserves, banking network, level of financial inclusion, industrial base, infrastructure, import export, etc. The next is capital resources, state of art machinery and equipments, raw material availability, power generation capacity, etc. The technological resources depends upon research and development initiative, base of scientists and researcher, state of art laboratories, etc. All this affects level of innovation and invention of the nation. This also enhances the nation's international competitive advantage. The second factor is government regulations and policies. Government is one of the most important factors that influence the national income of an economy. Proper policies and government regulations can help to develop a favorable business environment for investment and capital gearing opportunities. Government provides laws and rules, regulations that affect exchanges, tax structures, duties, subsidies, interest rate, etc. That in turn affects flow of income in an economy. The third factor is socio-political stability. A stable economic and political system helps proper allocation and utilization of resources. Socio-economic and political evils such as wars, riots, strikes and social unrest discourages investment and economic activities in the country. Thus, socio-political stability is essential for the growth of national income. Conversely, instability in socio-political system deters national income growth. Let us now move to basic concepts in national income accounting. Let us try and understand certain various important concepts related with national income accounting. A table will explain the concept as well as its mathematical representation in mathematical formulae. The first concept is gross domestic product at market price. Gross domestic product at market price is the total monetary value of all the finished goods and services produced in the economy in one given year. The monetary value of each commodity is found out by multiplying the quantity Q and price of the commodity, that is P. So, mathematical representation becomes P1 Q1 plus P2 Q2, so on Pn Qn or summation Pq. Here P refers to the price of the commodity and Q refers to the quantity of goods or services. The next concept is net domestic product at market price. Net domestic product at market price refers to the net monetary value of all the finished goods produced in a country in one given year. In order to arrive at NDP at market price, we subtract depreciation from GDP at market price. So, the formula is GDP at market price minus depreciation or summation PQ minus depreciation. Here P refers to the price of the commodity, Q refers to the quantity and GDP refers to gross domestic product. The third concept is net national product at market price. When we add net factor income from abroad to net domestic product at market price, we obtain net national product at market price. For this purpose, we add factor income earned from rest of the world by our country, but subtract the factor income earned by rest of the world from our country. So, NDP at MP plus net factor income from abroad gives us net national product. Here factor income refers to rent, wages, interest and profit. The fourth concept is net national product at factor cost. When we subtract net indirect tax from net national product at market price, we obtain net national product at factor cost. So, the formula is NNP at MP minus net indirect tax, or NNP at MP minus indirect tax minus subsidies. The fifth concept is private income. Private income refers to income of people and private business organization of the country. We obtain private income when we subtract government's income from national income. The income of the government includes rent, profit and interest earned by government. However, there is transfer of payments from government to private sector as well as from private sector to government. These are adjusted by subtracting the transfer of payment from private sector to government and adding the transfer of payment from government to the private sector, which includes individuals. Other than that, the corporate taxes are also subtracted from national income to obtain private income. So, national income minus government income, or national income minus factor income of government minus corporate taxes minus transfer of payments to government plus transfer of payments from government gives us private income. The next concept is personal income. Personal income is referred to as total income of individuals. It includes all the factor incomes earned by people of the country, that is rent, wages, interest and profit. It also includes the transfer payment from government and business organization. Here, the transfer of payment from people to government are subtracted in order to arrive at it. Personal income is equal to private income minus undistributed profits. The next concept is disposable income. The personal income left in the hands of the people after the paying of direct taxes is called disposable income. Income tax, house tax, land tax, etc. are included in direct tax. Personal income minus direct tax is equal to disposable income. The next concept is per capita income. It is the ratio of national income and size of the population. It is referred to as the national income per head of the country. So, national income divided by number of people will give per capita income. Let us move to the importance of national income. The reasons for growing importance of national income studies in recent years is due to: first, economic policy formulation. National income estimates are the most comprehensive measures of aggregate economic activity in an economy. National income estimates help one to know and understand the aggregate value of the economy, which in turn assists in laying down future course of action for socio-economic development. As such, national income figures and data are important tools of macroeconomic analysis and policy formulation in the hands of government. The second reason is accurate understanding of economic structure. National income data and statistics enable one to have a correct understanding about the structure of the economy. It helps us to know and understand the relative importance of the various sectors of the economy and the extent of their contribution towards aggregate income generated in an economy. The study of national income data thus helps us to learn how income is generated, how it is distributed, how much is expanded, level of tax, etc. The third reason is economic planning. The government of any economy cannot possibly frame a feasible plan without having a prior knowledge of the trends in national income of that nation. Considering this, national income statistics are the most important tools for the long term and short term economic planning of every economy. The Planning Commission of the Indian economy also keeps in view the trends in national income while formulating the 5-year plans. The fourth point is inflationary and deflationary policy formulation. High amounts of inflation or deflation both have adverse implication on an economy. National income and national product data enables one to have a general idea of inflationary and deflationary gaps. For accurate and timely formulation and execution of anti-inflationary and anti-deflationary policies, we need regular estimates of national income. National income expenditure distribution. The study of national income data helps one to understand as to how national expenditure is distributed between consumption expenditure and investment expenditure. From this point of view, national income studies enable one to provide for a reasonable amount of depreciation in order to maintain the capital stock of a particular society or community. The next factor is distribution of government grants in aid. National income estimates help to provide for a fair and equitable distribution of grants in aid by the central governments to the state governments and other constituent units. The next reason is raising standard of living. National income studies help the government to make a comparative study of the standard of living of people residing in different countries and of people living in the same country at different time periods. This helps the government to take appropriate measures for raising the standard of living of the citizens of that country. The next reason is international sphere. The national income studies are important even in the international sphere. National income estimates helps to distribute the burden of international payments equitably among different nations. National income statistics also assists in determining the subscription of different countries to international organizations like UNO, IMF, IBRD, etc. The next reason is budgetary policies. Government of every economy in today's modernized world tries to prepare its budget by using national income statistics. Government tries to formulate anti-cyclical policies according to the facts revealed by national income statistics. The taxation and borrowing policies are framed in such a way so as to avoid fluctuation in national income as far as possible. The next one is public and private sector. National income statistics enable us to know the relative roles of public and private sector in the growth and development process of the economy. This in turn helps us to understand the level of dominance of each of these sectors. The next reason is defense and development. National income statistics help us to divide the national product between defense and development processes. From the facts and resources available, we can easily analyze how much can be expended for defense purposes out of the total national revenue generated. So, to conclude, the study of national income has helped the economic planners as well as the businessmen and other stakeholders. Planners can decide as to what measures should be taken to improve the quality of economic planning, the inputs to be provided for improving general standard and quality of economy, as well as what efforts should be made to reduce the growing disparity in different income groups. National income has now emerged as an important aspect of economy. No country can prosper rightly without considering the issues related with national income in its total economic planning. Furthermore, national income is a right determinant to understand the success of economic planning and the extent of achievement of economy in a given situation. It is appropriate to study the concept of national income for understanding the course of development of economic advancement. Students, I hope today's lecture will help you to set a right background for study of national income. Thank you. Thank you very much.